Welcome to today's episode of the Virginia Investor Podcast with Tyler Sorensen, a certified financial planner, a wealth management advisor, and my friend who helps people with money and owns rental property. I wanted to have Tyler on the podcast, one, because I've known him over the years. I've seen kind of the portfolio that you've grown, and I think we can all learn from your experience getting more into the corporate world, and then some insights that you've had that led you to real estate investing, again, with your knowledge also of the other side of things, investing. And it's funny because typically when we talk to rental investors, it is typically like you either build a rental portfolio or you buy stocks and invest in bond, like do all this, but you don't do both. And if you do, if you do one or the other, you're evil. And there's this big battle of what. But I really like talking to someone like you, who's very well read on one side of things, but also has the rental portfolio as well and understands that too. So I am excited to talk to you, learn more about your story, your background, and thank you for coming on the podcast.
Yeah, thanks for having me.
Awesome, man. Let's get started where we do with all guests. Tell us about your background. Where'd you grow up?
I grew up in Suffolk, Virginia. I'll say at the time it was a lot more rural than it is now.
Yeah.
Just kind of the sprawl, the development has reached sort of the skirts of where I grew up. So across the street from me was a big peanut field and backed up to a river. So growing up, we had tons of fun out there, everything from paintball to hide and seek and all that. So moved to Richmond after college.
Okay.
Background growing up, I didn't have a hard way, wasn't like easy either, right? So it was just pretty much down the middle of the fairway, and high school to college, pretty traditional path, and landed in Richmond after graduation.
What'd your parents do for a living?
So my mom was an occupational therapist in the school system, and then my dad owned a company, his electrical and mechanical supply company. So industrial, everything from lighting to generators and HVAC and all that.
And he owned the company.
Mm-hmm.
So you had an entrepreneur in your family, and you got to probably a little bit of taste of what that was like.
Yes. Yeah. We saw that. Military was a big client of his, and particular shipbuilding. So we knew when there was an overhaul going on, things were pretty good. He was, not that he was ever absent, but he was working more during those peak times, right? We knew when things were tight too. So
were you big on academics, sports, both, neither?
So sports for us, I'm one of three boys. I'm in the middle, and athletics, I think as I grow and, as my kids grow, I understand the value of athletics even more. But sports were a must. Extracurriculars were a must. I think a little bit of that was a pressure relief valve for my parents.
Right. Yeah.
But the rule into high school was if you weren't playing sports, then you got a job. So it was a lot more fun to play sports with your friends, right? Than go cut grass or something like that. So yeah.
And then going into college, was that just what everyone else did? Because that's pretty much like at this time period, that's what everyone did if you wanted to be successful, right?
Yeah.
So did you have your eyes on a particular college? Were you driven to get in somewhere, or were you just going wherever you're able to get into?
That's a good question. I'm going to say, it was, I think, more a sign of the times. My parents pushed it. I could have gotten more out of it, I think, if I was there for...
I think we all could have.
Yeah, if I was there for reasons that I knew, right?
Right.
But no, college was great. It wasn't anything earth-shattering. I went to Radford University, so it wasn't like a bad experience, but I have great friends. My wife, she loved her college experience and does a wonderful job staying in touch with friends from that chapter of her life.
Did you guys meet at Radford?
No, she went to JMU.
Okay.
So I think we met each other at the right time after college.
Yeah. So during college, what was your career outside of all whatever fun you were having? There was probably some sort of career ambition, or you were studying for something. What did that look like?
I didn't enter college with ambitions to become something. I grew up, again, Suffolk, Virginia, so kind of lower Chesapeake Bay, rural. Around my dad's business, got to run deliveries and see the harbor, right? Mm-hmm. So I actually did want to become a tugboat captain. That was kind of my all right, I can see myself getting to there. Graduated in 2009, so life after college looked a little different than I might have planned.
Rough timing,
right?
Man.
So, luck finds some people, and didn't enter into college with the ambitions of becoming something. Would have been 2008. I had a co-op lined up with Norfolk Southern in coal marketing. That sort of fell through with the economy at the time. And I think ended up being a good thing. Coal and out of the New River Valley, I think, has sort of pulled back a little bit. And there's probably circumstances led to Richmond versus Roanoke. So.
Right.
Yeah.
And had you spent any time in Richmond, or was that just where the job
No, when I actually told my grandfather where I was moving after college, and he goes,
said stay away?
Yeah, he's a little old school, and he was like, well, I'm not coming to visit you.
Yeah.
So,
Well, it was
Richmond
different.
had a reputation,
Yeah.
you know?
It was different. And me personally, I know there's plenty of Richmonders that would say different, but my personal experience was I moved away from Richmond in the mid-teens, maybe 2015, 2016, probably 2015 for a couple of years. And when I moved, I was like, yes, get me out of Richmond.
Yeah.
When I was gone, I was like keeping up with buddies and communicating with people back in Richmond. They were like, we went to this festival this weekend. We're hanging out with all these new people, and we're at this brewery. We're at these new restaurants, and now we're going here and going to this neighborhood and that neighborhood and this neighborhood, and there's this other festival, and now we're running this 10K or 5K. And I was like, none of this is in Richmond, right?
Yeah.
Like this is not happening. And that was right when, like, I think the Hardywood era, where Hardywood started breaking some red tape and like making things happen over in Scott's Addition and things. And again, like the developers would probably say like, man, that started years earlier or whatever.
Yeah.
But in my experience, that's what I noticed. And then when I came back to Richmond shortly after that, I was like, different world.
Yeah.
So if you came in 2008, it was just before, at least in my experience, it was before all that excitement.
Yep.
So it probably still was. It wasn't really known for what it is now.
Yeah, it's definitely different in a lot of positive ways. So.
Did your wife want to come here, or were you guys married at the time, or you?
No, she grew up here. She grew up
Okay.
in Richmond,
Right.
and yeah, we met after college when I was, I guess, what they called a fan rat. So,
Right. Yeah. Cool. So after college, this is 2008, 2009 time period, which is a brutal time to get out and get in the workforce. What did that look like for you? What did you end up doing?
So they say don't take the first job that comes your way. I did. Let's see, was at the time of all things, it was a job in banking and finance. And,
Interesting choice.
Yep. And even better, it was in subprime lending. I was admittedly green. I didn't know what I didn't know.
Of course.
But I got a job, right?
Right.
That's what my dad said to do. Graduate, get a job, move out. So, yeah, that's what landed me here. And subprime lending at the time was kind of public enemy number one. And
Right.
yeah, that division of the bank shut down just a few months after I started. So,
But you had you're out of college. Like you don't care about, you're not tracking any of this stuff.
No.
Like you don't know what subprime lending is at the point. You just have a job, right?
I just have
That's
a job.
where you're going.
Yep.
So when that shuts down, does that look like a layoff and now you find a new job, or did you see the shutdown coming with that company and then transitioning before that?
I wish I would have seen it coming, but probably would have made choices differently going into the workforce. But no, didn't see it coming. Was admittedly naive, but the bank I worked for at the time mapped us to another part of the bank.
Okay.
Right? And through that, I learned more about banking. You know, you read about things in textbooks and classrooms, but it's not until you actually do it that it matters. So learned a lot about banking, and I found sort of the path I wanted to go within. And that was private banking. I thought it was cool, sort of ritzy as a 23-year-old, right?
Mm-hmm.
I was like, this seems cool. So just kept following my nose and asking, how can I get there? And found my way onto a team there.
What does private banking look like? Like, is that where you're working with higher net worth clients and you're their individual like point of contact with the bank?
Yeah. So the function of the job is essentially to deliver the entire bank, right? And that can be credit facilitation, that can be deposits. If they're a business owner, looping in other peers of yours within the bank on maybe treasury management or payments, right? So you're sort of think hub and spoke. You're the hub next to the client, and then you pull in role players as needed. So,
Got it.
But yes, it's like higher net worth clients that are really active and use both sides of the balance sheet actively.
That's a good place to be when you're 23 years old. Like,
Yeah.
because a lot of times, again, speaking from my experience only and other people that I know, it's like you're not necessarily taught finance growing up unless it's in your family. Like you're taught, go to college, get your job, and just do that forever.
Yep.
So at 23, you're working with high net worth individuals for whatever reason. I mean, they could be high net worth for a million different reasons, but you were now able to build relationships with them. And of course, there's professional boundaries. Like you might not be asking them like, how'd you do this? Like, what's
Right.
your strategy and stuff like that? But were you able to pick up anything or learn anything in those relationships that really was like, holy cow, what is this person doing or what is that person doing?
I think when you do that job correctly, you do become a trusted outlet and resource for whether it's a family or individual or what, right? And so you can kind of press that, like, hey, how'd you get here? What'd you
Right,
do? Like,
right.
how do you think, right?
Right.
And I think that's fair. In my experience, they enjoy talking about it, privately, obviously. But yeah, I mean, I think people like to tell their story, and that's a fun part of my day is listening. So
Now that I think about it, like I have a private banker with one of the banks I work with, and we sat down and he walked through my entire story to like get to
Yeah.
know me better, understand exactly what my company's strategy and goals were and where
Yep.
we were headed and how he could help us. So I guess part of the job is learning exactly where that wealth comes from and what the goals are with that wealth.
Yeah.
What were you learning at this time? Were you learning about real estate or learning about investments or learning about business ownership through these relationships?
A little bit was learning how financial products actually work, right? Why people use them, learning people better. And it's one of those things that you either kind of have or don't have, right? If you're relationship oriented, it's so easy to talk to people. And I place a lot of value in relationships like that. So, but yeah, I was just a sponge. I just like anytime I got to look at somebody's, whether they're tax returns or balance sheets, PFS, like, whoa, those are big numbers. How did that happen, right? And you can kind of track back and learn the history of the relationship, and you're like, golly, man, they're just a regular person. Like they didn't grow up different or privileged or anything like that. They just took action. They made the best of their resources, right? Put it to work and had, I would say, some good relationships along the way that gave them good guidance and advice. So.
Would you say there were any similar traits with those high net worth people? Like, and you could think of, it doesn't have to be too complicated or complex traits, but like, were there any, you mentioned relationships, maybe these people were good at building relationships, but what other traits did you notice? Were they all nice? Were they mean? Did they have goals and ambitions, or were like, what did you start to pick up when you started to build these relationships?
Everybody is nice. When you're at that level, they also have high expectations, right? And so delivering on what you say you're going to do is really important. I think in Richmond, Richmond's this like eerie small town that's sort of big, right? You're not more than 2 or 3 degrees from any other person. So your name can become mud pretty quick.
100%. Yep.
So I learned that, execute on what you say. Traits, I think a consistent like commonality would be values like are passed down, right? So, and you would know the names, but they do teach money. They do talk about money. They use it as a tool. It is less emotional. I always say that there's always some emotion in money, but yeah, it's diligence, patience, all of that.
What about in how to get the money itself? Now, I know that it's interesting because the common trait, I was talking to someone about this last night. The common trait that I've seen on this podcast when we have very successful investors come in here, I mean, people need to make money, right?
Yeah.
But like they always were successful through wanting to accomplish and wanting to build and wanting to create and wanting to change or impact. And that's where the serious wealth came. There's no one in here, man, I wanted a Lamborghini and I just like, and again, it may be out there, but my experience with the guests I've had on this podcast and other people in my network is like, as long as they're making money, they could care less about the money. It's just they want to accomplish, and the more they accomplish, it just turns out the more money they make. So what did you start to see as a way to make money? You know a lot more now. But at age 23, working with these individuals, did you start to see real estate, business ownership, other investments, and start to think about that in your own head?
So I'll answer that 2 ways. One, through the lens of some common items on balance sheets of very successful people that I was like, hey, if I don't feel like they're too different from me other than where they are in life right now, but they're also later in life. Consistency was always real estate. And if they were a business owner, it was the real estate of the company. And if they, were into, housing in different ways, that was a common theme. Discipline, like staying the course matters. And then the other lens, let's see, Ask the question again.
What were some tangible ways that they gain their money, like business ownership, what avenues did they take to become high net worth individuals?
The more often than not was a passion that turned into something.
Mm-hmm.
It didn't start off just like you mentioned, hey, I'm going to go set out to make myself worth 10 or 20 or $30 million.
Right.
It was, hey, I want to go do this thing. I'm tired of whatever situation they were in. They punched out of maybe a job that they were reporting to and took ownership. And that's I would say the most common theme is ownership over their situation.
Right.
So, yeah.
That's a great answer, because that's another common thread that I see between the guests is they realize they're in control.
Yeah.
Like they take control of situations. They don't make excuses and say someone else was in control of that or someone else is in control. They're like, I saw this and I just took control and I ran with it. And this is, and then followed by some passion or something like that. And then they find,
it flips a switch and it just comes out.
Yeah. And so what that sounds like to me is probably a lot of business owners, like, because they are employed somewhere, they're either unhappy or find a better way to do it, or maybe unhappy with leadership or their boss or something, or how they're treated or the environment that they work in. Then they take control, find another way to do it, and end up being successful because they're willing to put in the work. They have the passion to drive it and stuff like that. So how long were you in private banking?
Total of 10 years and across 2 different institutions.
Awesome. So did the whole financial crisis impact financial or the private banking a whole lot, or was it still?
People got smoked. But again, I think you can have something out of your control happen to you, right? Take the economy and just stay the course, let it ride.
Right.
Or you can lean into it and figure out, hey, if this is my scenario, what does the other side look like?
Right.
How can I get there? What are the steps I can take? Who can I talk to help me? Right. Mm-hmm. So I kind of came in at the bottom of that. And I saw coworkers that, and this is probably a little bit more of how and why I got into real estate, but coworkers that had been with a company for decades, they got stung really bad. I saw people's retirement savings get next to wiped out, right? It definitely set them back years and years and decades probably, but I didn't want that to happen to me. I also realized that in any company, it isn't a particular company, but at some point you become expensive, and the idea or thought of a reduction in force is always on the table.
Right.
And I looked at the chapter in life where, these are people that I did develop relationships with as coworkers, where they were, their kids were in college, they were starting to gear up for retirement, and then they got the rug pulled out.
Yeah,
right.
That's brutal.
And it wasn't like any one thing. There's a lot there that was out of the control of any one person. But so I saw that happen, and I just had this, I guess, an aha moment that took a little while to formulate before I talked to my wife. I was like, I want more control. Right. And what does that look like? I've seen really successful people and some common themes, and real estate's always there. Right. And it looks different for everybody. But I talked to my wife and said, hey, I'd like to at least replace our mortgage payment. And I'm going to say it in a very kind way. It was always, to me, in a structure where I'm an employee, it's not an if, it's a when that thing happens. And so I didn't want that when to be at that same time in my life. So I talked to my wife. I was like, Jess, I'd like to at least replace our mortgage here. And that's backwards math, right? Because I'm taking on more debt to supplement something that, But I really saw it as something hands off because I love what I do. I didn't want to stop doing it. And just, the initial plan grew. I was like, oh, this is all right. This is working. Let's do it again. All right.
So was your initial introduction to real estate investing through your experience as a banker, like the high net worth individuals, you kind of knew that real estate investing existed? And then what did you do to study and be able to do it yourself? How did you make that first step into your first deal?
So I did a lot of, I'll say, self-education, and I did have clients that I asked.
Awesome.
Right.
Yeah.
I felt I had a strong enough relationship with them. So, hey, this is kind of what I'm thinking. Do you I see that you have done this, right? And they're always were more than happy to share.
Happy to help.
More than happy.
Absolutely.
Which was I did. I felt like I at certain points I was like, am I crossing a boundary here? And But yeah, I mean, I was able to get real life advice from people that had done it very well and big. And I was like, I'm not trying to replicate this, right? This is your recipe, man. That's your cake that you just pulled out of the oven. But but yeah, they were very generous in advice. And yeah, I think it was really important for me to have my wife on board too.
It's interesting where I think a lot of people think the really high net worth individuals are guarded and need to protect their business. It's quite the opposite.
No,
like they're the most willing to help. They have an abundance mindset. They want to bring others with them.
Yeah.
I'd say in most cases, maybe not in all cases, but in most cases, that's what I found. And so if you have access to high net worth individuals and you have that relationship in place, and don't ask them what you can Google. Ask them about their journey and their mindset and what maybe traps they fell in or what you want to avoid or how they would do it again today. Ask it from their perspective, not like, how do you do a burr or something, or how do you, what does a 1031 mean?
Right.
Don't ask those questions. Ask what you cannot Google and what you can learn. So, and I specifically throughout this podcast will not ask questions that you can, that's not why you're spending your time sitting here, is to answer questions you can Google. Right. So, how did you get your wife on board?
Well, I'm 6'5", so I just walked in. No, I'm just kidding. So I said, we're doing this now. I just talked to her. I said, look, these are our plans, and I just want a little bit of insulation in case something less than fortunate happens. And she was like, all right, I see it, And then I have a tendency to kind of, see things pick up and start to compound, and I'm like, all right, this is working, let's go. And again, learning, by this time I'm in my mid to late 20s, right? I think learned finance a lot differently, right? And better.
Yeah.
And I understood the rate environment at the time, and I was like, it ain't gonna get cheaper. So I was like, this is working. I mean, one of the focal point for us and how we buy was workforce housing. It's just very resolute. And so I was like, how can I back the truck up and if you can give me 30-year paper at 3%, I will take all that I can get my hands on. I felt more confident, right? If 22-year-old or 23-year-old me said, hey, go take out $1 million, like that would freak me out. That would really scare me. But I just, through like little bits and pieces, learned, got more confident. I hit my head, and you continue to go, and if it's working, keep rolling.
How were you finding your deals at the time?
Yeah, so I'm going to go with the least efficient way possible. Again, I value relationships. There's a real estate agent that I trusted, and I sat down with them and said, look, these are not, $500,000 plus properties. I know they're probably not worth your time, but I think where this is going to go is a higher number of transactions, and that's what I would, I'll work through you if you're open to doing it. I was like, yeah, man, it's fine. So I surfed the MLS links that he hooked me up with.
Awesome.
And, I didn't get anything on a deep discount. And one thing that I kind of started to realize is that there's a lot of flippers coming in and doing burrs and things.
For sure.
And I was like, well, I'll just, they're out there. I can tell that this was bought at an auction or something. Somebody's gone in and done all the expensive reno work, right? I don't have to come out of pocket or time to go do that myself. I'll take their work, right, and all fair price. But everything's good. All the functional components of the house. I tried to standardize it, right? So similar houses, similar cabinets, similar things. But yeah, I was just surfing the MLS, and if I found something that fit math-wise, I was like, let's go take a look at it. And if it passed the walkthrough, I was like, all right, this is good. This will work. Right.
Did you get into any rehabs or anything like that, or were you mostly looking for like turnkey?
Turnkey, plug and play.
Got it.
Yep.
Awesome.
If we needed to change anything, it was the paint color.
Right. So. And then you do a couple of those deals, and the tenants are in and stuff like that. Your wife starts to feel a little bit better about it. You start to feel a little bit better about it. You have a system in place.
Yep.
You just continue to roll.
The first two, I don't know that she felt a whole lot of confidence in me.
You run into some issues?
Well, it was when we were under contract on our second one. I remember it was Thanksgiving. We had bought our first one in, it was like maybe May. 2014 or 15, but I was home with my family for Thanksgiving, and I get a call that there was a sewer backup, and one house, simple for me to manage on my own, but now I'm away, and I'm like, oh man, how do we do this? So it was one of those, like it was terracotta piping from the road to the house, right?
Yeah.
And it was just time. And so that took all the profit from that, and then we're under contract on the next one. I'm like, oh man, what is timing here? So yeah, you learn fast. I was like, all right, well, this is emergency holiday, after hours. Like, how expensive is this repair going to be?
Right.
So that one stung.
Your cash flow for the whole year.
Yeah, there it goes.
Yeah.
And then some probably. But
Yeah.
no, and my dad was still alive at the time, so I called him. I was like, is this normal? I was like, is one of these a year? He goes, probably not that bad, but yeah, but keep pushing.
Yeah.
And so yeah, we just kept pushing, and because I think I even lost confidence in it myself. I'm like, if this is number one,
Mm-hmm.
and this is what's ahead.
If that compounded, that wouldn't be
right.
good.
So, but worked through that. I think we got up to 3 or 4 that we were self-managing, and at the time I was meeting tenants at the parking lot at 7-Eleven to pick up cash or Western Union checks.
Awesome.
And, so it's like, it works. Like, they're great people. Like, they just, this system works for them. I'll meet you down the street. That's fine.
Right.
There was a tenant we had that, and this is me being probably, I'm just too nice, and I kept believing the reasons for late payments and things.
Right.
And then I'm like, oh man, it's the holidays. I could never evict somebody at the holidays. And so January, February roll around, and I'm feeling like I'm really getting, jerked around.
Right.
Like, there's a lack of honesty here. And I then Googled, like, hey, what's the eviction process in Virginia? And you know it well.
Yeah.
It's not short.
Right.
And there's steps you have to take.
Mm-hmm.
And I was like, I don't have the time to get away from work to go do this in order. And that's when I was like, all right, Jess, we need to hand the management over.
Especially with your both of you had good careers, and you are looking to scale it. Mm-hmm. It makes sense, like, to not get involved with that unless you want to be a full-time landlord, which didn't sound like you did. So when I was first getting started buying houses, I looked at scale as a necessity, where I didn't want to be, because I was coming from a low capital position, and I didn't want to be caught on the hook with a big capital repair, some big CapEx project or something with one house. Mm-hmm. And so I told myself it was a race to 5. Yep. And if I could get to 5, they start to pay for the mainline backups and everything, like mainline replacements. Like, if I can get to 5, they start paying for themselves, assuming they cash flow well enough and stuff like that. Then when you're at 5, you're pretty, like, your lease it's paying for itself to some degree, assuming they're good assets and stuff like that. Is that sort of how you looked at scale when you were?
That was a benefit I learned. Right. I didn't say, hey, I need more to offset costs, right, or unforeseens. It was working. The math was great. And I was like, let's keep going. And then by happenstance, I'm like, oh, we're cash flowing X. We have a mold remediation we need to do. That doesn't hurt as bad because we've got, so yeah, the bigger ticket items don't hurt as bad when you've got some scale, and it sort of, in a way, self-insulates. And
same with time. Like, scale and time. So time, ideally you have appreciation. Yep. And if you're growing a portfolio, you're having more income. Largely you learn that, like, if you learn either from a landlording standpoint or a property management standpoint, that you can, over time, things get better. Yep. Because you become a better landlord, or you hire a property manager that has hopefully a decent property manager that does a good job. Yeah. And there's also some aspect of, like, a new tenant sometimes will take a month or two to, like, kind of get stabilized in your own property and sort of understand the light switches and the plumbing and everything else, and what to do and what not to do. And so things tend to stabilize and get better with time as well.
Yeah. And it's funny, a house always operates a little different for each person. So,
yeah. I've noticed that. Yeah. And there's it's interesting too, because you'll have owners that move out of their house and they're like, everything's fine. Yeah. And then the tenant moves in, they're like, this doesn't work, that doesn't work, this doesn't work. And the owner's like, oh, we just kind of got used to that. Yeah. And I'm like, all right, well, the tenant's not used to it. But yeah, so yeah, it is funny how that works. And you can have, obviously, between tenants, like, they just have different preferences and stuff. Yep. And so that's where we learn to, like, draw the line of what's reasonable, what's not reasonable, and, things like that. So you had said that you tried to self-manage, which I think is actually, I mean, if you want to send it straight to a property manager, I'm not going to argue that, right? Like, and a lot of people have might be absentee, meaning they live in a different state,
Right.
probably use a property manager unless you have really good relationships already in the market. But if you live here and you don't necessarily have a big family you want to spend time with or travel, or a W-2 that you're really focused on, improving in and stuff like that, property management can be a good solution. When you move to property management, you said you were around like 4 or 5 assets. I think it's a decent idea to understand landlording before you do that. So you don't get played by a property manager. You can kind of call them out if they're not telling you the right thing. But it also gives you a sense of like understanding what the property manager has to do and what you're paying them to do as well.
I think that's a really good point. I think you learn to speak the same language, right? And so like if I call you guys or vice versa, like our conversations are probably a little bit of a different level than if I had just out of the gate started with a property manager, not knowing what I learned through sort of boots on the ground, right? So yeah, I mean, I think it makes my relationship better with my professionals that I work with, and just all the way around good.
Right.
Yeah. And you learn so much, right? You learn the tendencies of people, right? You learn what hangups happen, what common, repair items are, and that kind of thing.
Right. What are some tips to work with a good property manager? Like, how would you, for other investors that are considering either hiring property managers or maybe they have a property manager that they're not really working well with, what are some tips to work well with your property manager?
To me, the biggest thing is communication,
100%.
right? Like responsiveness, like I'm good with taking a day or two to get back to me, but like don't take 3 or 4 or 5 days, or like I shouldn't have to follow up to, right? But communication, like response, it all, that's what makes my life go. Like if I'm in the dark on something and you can provide color, like cool, I'm good, let's roll, right? Okay, that makes sense, move on. So communication is the biggest thing. Understand process, right? So if you're talking to a property manager or any professional, is like identify if they have a consistent, repeatable process. That's
a big thing, because I think you can decide what sort of property management style you want. Some people will want we've had clients that have 20 houses and they want to hire the property manager that manages 100 units, so that they are the business, and they're like, they want all everything done their way, which is fine if that's what you want. And that's what some people will seek out. Some people will also seek out, regardless of how many units you have, they want the 300 to 400 unit management company, because they feel like that will give them extra attention, but then you sacrifice some level of experience and stuff. And a lot of times you have like the owner of the property is managing your unit, which there's a benefit to that to some degree, but then they might have the tools and resources. And then some people will want the larger management company because of the resources, the tools, the processes and systems. So ideally you find one that has resources, tools, and systems and processes, and also is responsive and communicates well. And so you're looking for all these things. And I think
it sounds like a unicorn.
Yeah. If you can find one of those, these are the questions that you want to ask, right? Is like, we always kind of say like the processes are, anyone can build out property management processes. There's a lot of things that are heavily guided by rules and regulations and law and things like that. So you want to build out good, very strong processes. But the hardest thing to regulate is communication, responsiveness, taking ownership of when you mess up. Like, don't make excuses. Don't blame the tenant. Don't blame the client. Don't blame the property or the vendor. We're in control of all that as a property manager. And so the idea is like, take ownership, prioritize relationships, be immediately responsive, and communicate well. And if you do that, assuming you're good enough to put decent processes in place, you're going to be a really strong company. And so I think if you're shopping for management companies, you look at the communication, the responsiveness, the relationships, and are they going to own what they're doing?
And I think too, like as a client, like you just have an understanding of how full any PM's plate can get, day to day. Right? There is no single day that's the same, and they could have 15 maintenance items show up in 15 minutes, right? And, so just approach it with some understanding from the client side too.
This is rare. This doesn't happen all the time, but it's happened here where like your property manager that morning may have found that someone passed away, and they might have found that someone passed away earlier in the unit and came back to the office, and now they're getting a phone call about like a tenant that wants a cat but can't have a cat,
Right.
and then they're getting a phone call from like, hey, my distribution's $25 short.
Right.
What's happening? Like,
Yeah.
So they go through a lot throughout the period of the day, and it takes a special person to be able to do that for some period of time, right? And I was not the person to be a property manager for years because I care way too much about people liking me and like being friend and having these relationships where like you realize you're in situations where you can't you're not going to please everyone. And to me, that was very difficult because I want to help people and I want people to I want to be able to like establish a relationship and help them get to a better place. But you can't always do that. And so I learned over the years that you need to hire very specific personalities in different roles throughout the company so that they can perform very well at their job and still build a relationship with the resident, but also be okay if the resident doesn't take their help, basically.
Yeah.
It's interesting.
Yeah.
Back to these acquisitions, like you're buying this. Were you at the time using creative financing, or were you using your own funds, like 20% down, or how did that look?
Yeah, so pretty straightforward. Not creative financing. I was like, what is the longest term paper I can get?
For sure.
Right.
Yeah.
So how many of these 30-year notes can I stretch out? So I went that route. It was all 20-25% down towards the end after a certain number of units. It's been a while since we've bought anything, so I'm sure lending guidelines have changed a little bit. But no, we were pretty straightforward. I liked the larger down payment. It just made me feel like it was a more solid. Like I'm not running on like a razor thin line of anything. And it helped with cash flow and all that.
Yeah, less leverage, better cash flow.
So,
and you were still able to scale, like you scaled up a pretty good amount, like even just putting 20% down.
Yeah.
Did a lot of these deals come through that realtor, or did you eventually get into did you ever start getting into like investor meetups or anything like that, or were you just pretty much just relying on this realtor? And
I mean, I would surf the Zillows and the homes.com, and if I saw something, I'd throw it to him and say, hey, what do you think? You know, if it wasn't on the MLS, it's like, that one's actually not really listed. So, but you know, there were times like, I don't see that. Let's go take a look. I think I went to maybe a dozen meetups early, and it was more to hear what people were saying and learn. And, you know, maybe through that network a little bit. And, you know, if I'm rewinding time when I'm first getting into this, like I need to build my Rolodex out for my little property management company that I've got for 3 units. I need an HVAC guy that I can trust. I need a this, a that. And so that was a lot of why I went to those. And then you do meet some people that are, you know, they think differently. And I'm like, wait. I think one of those I learned about like DSCR loans, and I was like, okay, and so I go back to work and I call one of the commercial bankers that I work with. I'm like, walk me through this. I was like, yeah, those are sweet. They work like this. I'm like, yeah,
right.
So I was like, oh, okay, and so yeah, you can get a little creative and yeah.
And then so at some point you got into financial planning.
Yep.
Like so you got out of private banking and went into financial planning. What was that? What was that move like for you?
I mean, as far as my day-to-day, it wasn't dissimilar, right? In the role I was in banking, it was very much like a business development role. And I was doing a lot of the wealth management, the planning. And so the bell rang for another merger with the institution I was with. So I was like, all right, I've been through this before. Big bank mergers, usually there's a culture clash on the backside of them. There's, you know, fits. And I'm just like, at that point in my life, it was a combination of that. We had our first child. I was like, Jess, this is never going to get easier to do, right? And leaving a role like I was making good money in my late 20s, early 30s. My closest friends and my mom, like, when you're going to do what? Yeah. You know? Yeah. My older brother, he's like, dude, let it rip. You know? Like, yeah. So, yeah, it's just... I did. I got some looks like I had 2 heads, right? But it was all like again, it goes back to I wanted more control and ownership. Right. So I was like, all right, if I'm doing all of this here in this role and I'm handing off the relationships at certain points, I'm just gonna go build it myself. So same thing. I'm doing a lot of that work now. I love where I am as far as companies go. We have a great setup, and I often get asked like, you know, why didn't you start here? And I was like, well, I kind of wish I would have. Like this would have been really great if I just started here out of college. But I always catch myself. I'm like, no, I'm at the right place at the right time. What I learned in the last decade is like irreplaceable. It was right place, right time. A lot of support and encouragement from my wife to let it go rep. So.
Do you think the rental property gave you some confidence in that, like as some sort of backup? But
a little bit of the last push and what we added was to supplement sort of those early years, because you go out of a good role and making good money, and I'm like,
when
I got a kid.
You're leaving that role, are you going to, is it like straight commission, like zero salary, and you got to find your book of business now?
Yeah, well, I think everybody's entry point can be different. There's a little construction that you can do, and for me, it was I did have a little bit of a base, but it stepped down pretty quick, and I was like, okay, we gotta but again, there's a long runway. Like, to build a wealth management practice, I think correctly is a slower burn than people might think.
Right, yeah. Of course. Being that you've invested in real estate, you're now advising clients on all kinds of things. Did real estate ever play a role in that advisory? Like, how are you working through delivering like sort of advice to your clients with this in mind?
Yeah. Well, I mean, real estate's part of everybody's picture. And I believe in physical assets as well as paper assets, but for me, it was always complementary. I will help clients like run the numbers and think through it and play devil's advocate of, okay, here's the things that, at least in my experience, are sort of blind spots that you might not be seeing, and are you okay with that? One of the ones I always love is I want the beach house, right? Like,
right.
Beach house is great. Like, let's do it. But think about X, Y, and Z. Like, I don't know the last time you rented a beach house, but usually that HVAC's running 100% of the time. The salt air eats it up. Like, are you okay with that, right? And if they're okay with that, then cool, let's keep going.
Right.
But those are just like little things that, I think people have goals and they want to achieve and accomplish. But let's sort of slow down and look a little deeper too.
Yeah, you don't have to mention any specifics, but like, do you typically speak about like allocating cash, like dividing cash to certain asset classes, such as like stocks and bonds and real estate and this and that? Like, how would you typically speak on that?
I mean, it's a great question, but I think that's it's going to be a unique answer for everybody, right? You've got rules of thumb. I would probably advocate having pretty decent cash if you're going to go into real estate, right? If you're investing for something, people, I think a lot of times have money compartmentalized, right? They say, oh, this is set aside for this thing in the future. Okay, well, we need to all to be harmonious, and if we can take from something else, like, what's the trade-off to be able to get to this sooner, right? So I think a little bit of that is it's entirely unique to each person, but yeah.
And what their goals are and how hard they want to go in different areas and what time they have and stuff like that.
Yep.
What metrics matter to you the most now as a real estate investor? Like, you had mentioned, like, you had scaled up your portfolio, maybe like you're letting it cook now, or looking to buy more in the future. What kind of matters to you the most now when it comes to your real estate portfolio?
Cash flow.
Yeah.
Grant Cardone, buddy. Yeah. No, it's cash flow. It's pick a business. If you have a cement company, if you've got an asset sitting in the parking lot, you're losing money.
Right.
So it's always cash flow, and the more positive, the better.
Is that cash flow in a sense of like you're a guy who would rather have, let's say, like, there's always a saying, these are just random numbers, but you either have 20 paid off houses or 100 leveraged houses. You'd rather have 20 paid off and high cash flow? Or would you rather have 100 with, cash flowing 400 a month?
Ooh, depends how long you got, right?
That's a good answer.
What's the maturity of the note? I like both.
Yeah.
But I mean, over time, you ideally want to be debt free. But
right. There's an interesting argument that Rich Lennon has been on this podcast, and he made it on this podcast, and he said it elsewhere as well, where like the house has so much equity that's now essentially cash that you're getting a smaller return on, right? And so you might as well sell the house and do something else. But then there's also the freedom of like, first off, when is enough? Like if you have 20 paid off houses, do you really care about that? Like return on cash? I mean, assuming you have like some other stuff going on, do you need more? Like is it? And so there's always this discussion, right? And so, but there is the argument of like your cash is doing less for you if that much equity is sitting in the house to get $2,000 a month, and you have $200,000 of equity sitting there getting $2,000 a month. It's not great, right? And so,
that ain't bad.
Yeah, it's not terrible, but there's other things you could put it in.
Yeah.
And for me, I mean, I'm more of the guy that like I want 20 that's paid off. But I think that's just more peace of mind for me, and I got other stuff going on that brings in cash as well. How do you look at those scenarios?
If you're comfortable with debt, then you're comfortable with debt, right? And if you're not, then race to get rid of it. But use it as a tool. Like it's there. Use it smart, right? But be logical and leverage, but don't get out over your skis. And I think it's kind of standard comments there, but yeah, both those scenarios are good, Stephen.
Yeah, you can't go wrong.
Yeah.
Like, yeah, I mean, yeah, with all the obvious assumptions in place, if you have 100 that are leveraged but not over leveraged, but you have 100 that are properly leveraged, or you have 20 that are paid off, you're not really going wrong, I think, in any scenario. It's just a matter of preference. But it's an interesting question to ask, because you usually get 50-50, and it largely might depend on the stage that investor is in, or the person is in their life.
Yeah, if you're if you're trying to step into maybe it's your 60s, and you're like, hey, I've been working here, I've got my investments there, and my real estate's over here, and I'm trying to sunset the debt, so now I'm entirely cash flow positive. Like the only thing I'm paying for is maintenance, taxes, insurance. So.
You had mentioned something when we were speaking before the podcast about gratitude.
Yes.
And a mentor had given you some advice. Can you talk about that a little bit?
I think gratitude would change the world. I don't know if you've ever sat down and written thank you letters to people, but it's cathartic. Mm-hmm. If you've ever, I had a mentor challenge me and said, hey, 3 times this week, reach out to somebody that has done something for you in the past and just say thank you. And that's it. And I was like, what? And he goes, it's the practice of gratitude. And so I started doing that, and I'm writing my wife a letter, right? I wrote some friends a letter, and just say, hey, thanks for supporting me, pushing me, or whatever. And so I still do it. I fall in and out of it, but I will tell you, I feel better about myself, the world, if you just look back in time a week, find 3 people that have done something for you, reach out either verbally or write it and say thank you. And I promise you, your perspective will become more positive than anything.
And I know you don't do it for the responses, but I'm going to ask anyway. What sort of responses do you get from that?
A lot of it's gratitude back. When I first started doing it, it's random, right? When I first started doing it, and especially with my friends, right, they're like, are you okay?
Are you sick?
Are you, is this final breaths? And I'm like, no, just saying thanks.
That's awesome.
Yeah. But no, I think people like it. Right?
What did your wife say? Because this isn't a holiday, right? This is like a random thing.
Tuesday.
How did your wife respond?
Kind of, are you okay? Yeah. But, and then I sort of explained to her, she goes, that's actually really sweet. That's really nice.
That's incredible.
But yes, I believe gratitude can change everything about your perspective as an individual. So just being appreciative for the things that we have and things that people have done for us.
It's such a simple concept.
Yeah.
And I could tell,
Real
I'm
easy.
thinking about it right now, and I feel I feel enlightened. I feel happy just thinking about doing that.
Yeah.
But I also think of imagine what you're doing for those people and what their perspective and what whatever they're going through, and they just receive a random card from a close friend or an associate or whatever, just saying thanks for no reason
for something they thought was so trivial, so minor, and
It's interesting you say that, because I have back behind this studio is my office, and there's the backdrop of my office where I hop on like virtual meetings and stuff like that. And so I have all this stuff behind me. The main spread behind me is handwritten thank you cards, because that means the world. Like it's just so nice for people to write things about like how in some way, shape, or form, the company or our team has been able to impact them or change some way, or some charity that we've contributed to, or something that we've done that, we didn't do it for a thank you card or any recognition or anything, but like people who do recognize that, that's literally like what is lined out behind my desk, because it does mean a lot when I receive those.
And it strengthens relationships more than I ever thought possible.
Yeah.
So it's a powerful thing.
Yeah, that's cool.
To just say thank you.
Yeah, thanks for sharing that. I appreciate that. That's a good little nugget to take away.
Yeah.
Last big question for you is, what financial moves are you making the next 3 years? What should we look out for? It could be real estate.
Growing.
It could be it could be anything.
I enjoy building. Like we're in growth mode, at work, and like we're adding some pieces there, and I think it's going to take some time, but just that's where our focus is. Real estate's good right now. Again, large part thanks to you guys.
Awesome.
But yeah, we're not racing to add right now. Just letting it percolate and cook. But our kids are 4 and 7, and it's I'm like, all right, gosh, college ain't that far away.
It'll be before you know it.
A 7-year-old. What is going on? So preparing for some of that, and but enjoying. I'm trying to take more chapters out of my wife's book. Like, she's so good at staying in touch with friends. I can get my head down for a year or two and kind of go MIA, and I feel like I put my friends on the back burner. But she's so good at that. So I'm trying to maybe copy a little bit of her skill set there. But we're just growing at work. So nothing earth shattering there.
Who's your ideal client to work with?
Delegators, people that trust advice. They want a high touch relationship. We're really hands on. Investors, whether real estate or otherwise, just anybody that's forward looking. So awesome. I lived in the world with high minimums. I don't have that. So if anybody wants to talk with me, I always sort of, hey, like, there's nothing, like, no obligation here. I'm not, there's a home for everybody. We've got different ways to service, but
Awesome. How can people get in touch with you?
Just Google me. LinkedIn's out there. My socials are otherwise pretty boring. So.
Awesome. And we'll put your name all over the podcast.
Yeah.
Any final thoughts?
No, just keep doing what you guys are doing, man. This is fun. Thanks for having me. You're building something pretty awesome. It's been fun to watch and be a part of on the owner side, but as a client, and I like watching people hit success levels. So it's keep rolling, man.
Yeah, awesome. I appreciate that, and we appreciate your support.
Yeah.
Thank you for coming on the podcast and taking your time to share with our audience your information and knowledge and how you've scaled up and kind of your mindset behind it. I think that's super valuable, and I really appreciate you coming on the podcast.
Well, thanks again for having me.